Many are agreeing this morning that Jeep definitely had two of the best commercials on the Super Bowl yesterday, and Stellantis certainly needed a win almost as much as the Philadelphia Eagles did, and apparently both of them found a way. They found a way to get it done. Quite the interesting game yesterday, but that is all behind us now. So we now get into the regular business again. I did take a day off yesterday. It was obvious and apparent that social media was not active yesterday. I would say there was over 60% of people that were normally on social media were just not active yesterday. So I did take a day off. Markets are up nicely this morning as Tesla continues to try and find a bottom. There's about a 50% retracement possible. That would get us to about 350. That is a piece of technical analyses that I do believe in. A 50% retracement is kind of a normal thing in the broader market as well as individual stocks. And it has bounced off 350 this morning at least once so far. Lots of headwinds with regard to Tesla with negative press right now because the mainstream media is not happy with Elon messing around with their gravy train and also messing around with their liberal constituency. So bond yields are down this morning. Stocks are up ahead of the CPI. That could mean that some believe the CPI will not be that bad, or it could be that the bond market is beginning to believe that Doge is working. Now, if the bond market goes down, of course, that's a good thing for stocks and could be at least part of the reason for stocks being up this morning because there isn't really a lot of additional news other than an interesting Super Bowl yesterday. Because I did, I'm sorry, yeah, I'm dying here. So, because I did take a day off last night, I didn't give you any reporting on the news of the various economic reports that are coming out this week. So I will cover that later this morning. Okay, so the President of the United States was the huge winner. Trump was the huge winner yesterday with loud cheers when they showed up on the Jumbotron. And then I would ignore those who say that Taylor Swift was the loser. The crowd was clearly pro-Philadelphia, and the boos might have been more about her being identified with the competition on the field rather than anything about her politics. I'm not sure. It may be that she's taking a hit based on her politics, but I think it might have been more about Chiefs versus those other guys, the guys that didn't do the Philadelphia. The Philadelphia guys won it handily. Anyway, let's go ahead and start looking at the specific news here. This is from Eva's Tesla S Plaid. No, Tesla S Plaid. Yeah. I haven't ever used her before, but she came up with something this morning. I guess it's a girl, Eva. I'm not sure. Maybe it's not. President Capital. So it's the name of the company is President Capital. They adjusted their price target on Tesla to 426 from 278 and maintained a buy rating. So that was pretty good news on a day when we're seeing Tesla test that 50% retracement. Okay, AJ tackles this whole issue right now with regard to whether Tesla's sales are in trouble worldwide. He says there's so many headlines right now that way. He says this is his response. He's number one, the new Model Y. Customers have been waiting for the new Model Y, which isn't available yet. So we've had an Osborne effect. This is clear. I've been talking about it for a year. Over a year since before the end of 2024, 23, I started talking about the Osborne effect if they didn't come out with a Model Y quickly after the Model 3 refresh. He says, since the vast majority of Tesla vehicle sales come from the Model Y, it's only logical for sales to decrease until the new Model Y is available. Number three, Europe imposed additional 8%. That's a total of 18% now, tariff on the Model 3s coming out of China, making the price difference between the Model 3 and the Model Y very small. Since Model 3 came after the launch of the Since the Model 3, after the launch of the new Model Y, will not be the latest model anymore. And given the small price difference, it's logical that the Model Y will do a lot better than Model 3 in Europe. Now, I'll take a separate side on that one and say that the Model 3 would have a lot of folks that they don't care about the extra room, etc., the utility of a Model Y, and like the looks much better of the Model 3. Anyway, so then he says seasonality, part 2, seasonality. Auto sales always drop to the lowest level in January and February, driven by the winter, blah, blah, blah. We know this. Okay, then so sales are going to be the worst in the first quarter. And then one-time effects, depending on the specific market, year-on-year comparisons can be affected significantly by changes in local incentives and other effects. Attached as one example out of Germany, Germany's complete removal, 100% removal of purchase incentives and tariffs on China-made EVs, including the Model 3, affects demand due to higher relative prices. It says, bottom line, given these factors, we will see a significant sequential demand surge once Tesla opens the new Model Y floodgates. For this reason, all these Tesla sales are taking across the world headlines are just clickbait. Gary Black this morning. So this is a huge story. This is the story that I think this is maybe part of the reason for the most recent leg down. Gary Black says, autonomous driving is becoming commoditized. As SF CEO, as Ford CEO, that's a dollar sign Ford. Ford CEO Jim Farley has said many times, as we will hear later from BYD, they're adding the God's Eye ADAS system across its model lineup, adding that to the 𝐊𝐭𝐦𝐴DS YouTube video. Tesla and Google are clearly in the lead right now, but investors should view autonomy as table stakes to sell more EVs and to offer choice for Uber and other ride-hailing platforms rather than as some winner-take-all product from Tesla. Listen, I'll be happy. I've always said I'd be happy. I have always, if you look back on every single video I've ever done on FSD, I've said that I expect Tesla to end up with 25% of this cyber cab, the robotaxi business. 25% will be fine. We'll take it. It'll be great. But most of that will come in the United States and Europe, which will be much more profitable than the part in China that maybe we won't even get 25, or maybe we will. Anyway, Tesla's, because it's about way more than just FSD. It's about the overall experience in the cab. Later on today, Brian White and I will be talking about this in great detail. From Barron's, Tesla stock was headed for a fourth day of losses in early trading after the Super Bowl. Low favorability ratings might have something to do with the decline. Shares of the electric vehicle maker were down 1.5 today, as they continue to be. And the Dow Jones Industrials futures were up, so going the opposite way of the Dow. And it's still true. The drop came as Stifel analyst George Gangaro cut his price target to 474 from 492. Come on. I don't think that was it. They cut it from 474 to 492. Maintaining his buy rating, I think that might cause the stock to go up, not down. Gangaro is optimistic about the potential for a lower price Tesla due out early this year and the self-driving cars. He says Tesla plans to launch a self-driving robotaxi. Okay, however, a near-term headwind includes CEO Elon Musk's political involvement, wrote Gangaro, adding that Tesla's net favorability rating is nearing all-time lows. Stifel tracks people's opinions of potential car buyers about Tesla, and their opinions are dropping. Still, coming out into Monday's trading, Tesla stock was up almost 92% over the last 12 months. The average analyst price target for Tesla stock is 378, and we're setting at 356. And that's according to FactSet. That's up some $150 from the average target before the November presidential election. Wall Street believes President Donald Trump can help Tesla by facilitating the introduction of self-driving cars. Needham analyst Chris Pierce wrote Monday that most of the catalysts, such as self-driving cars, are priced in. I do not think that's true. I think they might have been at 488, but they aren't now at 356. He maintained his hold rating for Tesla stock and doesn't have a price target for shares. Overall, about 41% of analysts covering Tesla shares rate them up high. The average buy rating ratio for shares is about 55%. Tesla's about 41%. Again, to repeat that. So overall, I'm going to say, yeah, right now, Elon's personal ratings are down. Tesla's favorability ratings are down. I believe, as somebody who has studied markets my entire life, who has studied social change my entire life, this is, what I have done for a living is pay attention to these kind of things. As I've been running my businesses, I believe that this is a short-term thing, and that over time, the President Trump's high approval ratings right now will begin to yield results for Tesla and Elon. Not that I think it's impacting very many sales, maybe 10% of sales. And that's a significant. You always want to be you want to care about that 10%, but I don't think that anything's going to happen because we care about it. It's going to happen because the market changes, the overall zeitgeist changes. Okay. This is from Meyer Thacker. I have a mixed feelings about Meyer. He's a very prominent poster. He is an analyst, and he has been negative on Tesla, and he's won this round. I mean, he's been negative and shorting, and he's won this round. Okay, but this is what he says today. Got to give credit where credit is due. He says, now that we've finally round tripped the irrational Trump premium, which sent Tesla up a silly 65% since the election on absolutely zero fundamentals, the stock is finally approaching buyable levels now. He says he has an order in at 340. And I don't think he's going to get a chance to use that. And he will add for every $20 lower from there. Yeah, I think it could happen. If the overall market tanks, we could definitely go below 350. Right now, I'm thinking that 350 is going to be a very firm bottom. And I think Meyer will not get a chance to buy in. But then he could easily change his mind and decide that if it does bounce a couple, 3 times off of 350, that becomes a floor, and he might want to buy in a little higher. We'll see what he says later. By the way, if you choose to follow him, he is Fresh Jiva, FRESHGIVA. By the way, this is Randy Kirk. Please hit the like and subscribe and notify button. Regular programming today. Larry Goldberg around 5 o'clock and Brian White at about 7:45. And again, we'll dig deeply into the competition that's with regard to FSD in China. I think it's very worth paying attention to. And I also think it probably is not going to have about any significant impact on the coming rollout of robotaxi in the United States and Europe. But it could have a long-term impact in China. Anyway, much more on that tonight. Okay. Please go down to Patreon. I could use a few more folks signing up and supporting the channel. Morningstar had this to say this morning about the economy, which I thought was useful. With almost 2/3 of companies having reported results, the expected year-over-year earnings growth is 16.4%. Solid number. Significantly higher than the 11.8% expected at the start of the quarter, according to FactSet. Besides that, expectations amongst analysts are also high for 2025, with earnings growth expected to be 13% for the year. It's worth noting that the optimistic assessment flattens the forward price earnings ratio of the U.S. market, and as a reminder of the benefits of using longer-term valuation methods. Absolutely true. So they say that all eyes are on the CPI. Inflation will be back in the spotlight this week, with the core consumer price index expected to be a little lower than last month. So this is part of why the market might be up today and why bonds might be trading up and yields down. So they're expecting to come in at 3.1% following 3.1% this week. Following the stronger data last week and moderating interest rates expectation, this data will be closely watched and may reinforce expectations that rates will stay higher for longer. Rates are going to stay higher for longer, at least as of now. Okay, the CPI could drop a lot, and that could make a big difference, but it would have to do it 2 months in a row. Look out for any resulting disappointment among investors to be directed towards those companies with the most optimistic growth assumptions. Yes, you can follow all the economic, never mind. Okay, so as noted many times in this space, a good economy, which we seem to have a fairly solid economy right now, can have negative and positive effects. And one of the negative effects it can have is inflation. And the reason for the inflation, though, is not because of the good economy. The reason for the inflation is because the government is most of that good economy. And the government's not going to be a big contributor to the good economy in 2025. It's going to have to be the private sector, because DOGE and President Trump are clearly intending to cut government. So there's not going to be government jobs added. Well, U.S. government jobs. There could still be lots of state government jobs added, but there were so many added last year. I suspect that's not going to be a big driver this year. It's going to have to come from the private economy. Now, if the interest rates get down because DOGE is successful in proving to the bond market that government is going to cut spending and therefore cut the deficit, then the rest of the economy could perk up and make up that difference. But we could see 1%, 1.5% come off because of the lack of government spending, maybe even more. All right, this is what we got coming up this week. My favorite report that nobody pays attention to is tomorrow morning, the NFIB Optimism Index. That is the National Federation of Independent Business People, and they are suffering. They have been suffering. They continue to suffer. More headlines this morning about retailers closing. It's not good out there, and I don't know if there's a turnaround. We'll see. We'll see what happens with the NFIB tomorrow. A bunch of Fed governors speaking tomorrow. That never turns out that well. Wednesday, Consumer Price Index. The headline number is expected to be 0.3% month over month. That would be a 3.6% year over year. The CPI year over year expected to be 2.8. Actually, that is lower than the number that was Oh, I see. They're talking about the core. So the core CPI year over year was 3.2, expected to come down to 3.1. The headline number was 2.9, come down to 2.8 if the estimates are correct. And the core CPI staying the same month over month at 0.3, which is, of course, extremely high, way, way, way too high. So, but we'll see what happens on Wednesday. And then we've got more Chairman Powell speaking, testifying to Congress. That is often interesting. We get the federal budget number coming in. That will not be reflecting any DOGE yet at this point. And then we have got Thursday, we've got the initial jobless claims. No guess on that one. Look at that, no guess. And not very many guesses on the producer price index either. The producer price index last month was at 0.2. They're thinking that goes up to 0.3 on the headline number. Last month, a good number on core was only up 0.1, but they got no guess. PPI year over year was 3.3, as was core at 3.3, and no guesses on those. When I say guesses, I'm very sorry. I'm saying it's just, they take all this group of economists and they ask them for their impression, what they're expecting. For some reason, those are not there. Import price index expected to go way up. Don't know why. Last month it was up 0.1. This month I think it goes up 0.4. Import price index minus fuel up last month was good at only 0.1, and they have no guess. U.S. retail sales were up 0.4%. They are thinking it is going to be only 0%. That retail sales will not go up at all in January. Retail sales minus autos, they think that does go up 0.3%. So this is mostly a reflection of the normal auto business, I guess, not being very good in January. Industrial production was up 0.9% last month, and they're thinking it only goes up 0.3, but that would be good. Industrial production, wow, that's very different than anything else we have in that area. Capacity utilization was 77.6, which is not very good. They think it goes up a tad to 77.7, and then business inventories were up a tad. They think it could go down a tad. I don't care very much about that, as you know. And then the week ends with Dallas Fed President Lori Logan speaking. And again, as I like to joke, it could be bad. I mean, it usually is when the Fed members speak. All right, where are the markets right now? Tesla continues, but is picked up tremendously, back up to 360. Only down 96 cents for the morning so far. The Dow is up 142, the NASDAQ up 226, and the S&P up 39. The Magnificent Seven all up except for Meta and Tesla, of course. Meta's down a little bit. It was up earlier, but now down. But in general, the Magnificent Seven looking really good this morning. And the Cathie Wood stocks also in general looking good this morning. 𝐊𝐥 a little bit down and CRISPR also a little bit down, but the rest are looking very good. Let's look at the percentages. The Dow is up 0.34. The NASDAQ up a whole 1.19. S&P up 0.68 and Tesla down 0.32. All right, let's see if the bonds are holding in there. And let's start with the 10-year. Yeah, down even more, down 2.3 basis points at 4.46. As you know, my next goal is 4.25. For some, the bond market tends to work in eighths and quarters. I'm not interested right now in getting down another eighth. I really feel we need to get down that quarter to 4.25 to continue to move the markets in the right direction. Mortgages, etc., are all impacted by this. The 2-year down 2.5 also this morning, and the 1 month actually up a little bit as the shorts continued to defy logic, being up 0.8 of a basis point. Oil was moving up earlier for some odd reason. Not 100% sure why oil is moving up this morning, but it continues. It's up 85 cents. It keeps it at 71.85 and 75.48 for the Brent. In general, maybe this is, kind of a bounce. Maybe it just got too low and people were thinking there was a bargain opportunity. I don't think so. I think it's going down, as you know. Natural gas up 2.81 this morning. Similar thing. It had dropped dramatically over the last few weeks. So this could be some folks trying to buy in at the bottom. Gold up $48.40 to $2,936. I guess we're on our way to a test of the 3,000 level. Silver up 0.73 this morning at 32.68. Not quite following gold, or it would be over 34 at this point. Copper up 2.11 at $4.68. That's a strong move for copper. Don't know if the other commodities are following. I should check that out later. We did show on Friday with Cathie Wood, however, that commodities were about the same as they were in 1950. So in general, I'd say commodities are in good shape. Dollar rising a little bit on Trump threats is the headline. Bitcoin is up 840 at 97,220. So I would call that right in the absolute middle of the overall range. So the overall range would be like from 90 to 110. And so sitting at 97 would certainly be in the middle of that. Okay, those are the numbers. As mentioned earlier, we got Brian White and Larry Goldberg later today. Please check in. There is nothing to point to right now because I didn't do any shows yesterday. So there's no cards. So my deck is played out. And then what else would I like to tell you? I'd like to tell you to hit the like button, subscribe, and notify. And then I'd also like you to join Patreon. And other than that, as we follow up on the day after Super Bowl, you want me to check one more time just to see if Tesla's up, down, or sideways? Sure, I can do that. It is bounced off a little bit. It has not been able to hold the 360. So down 252 at this point at 359.10. And it has been great talking to you.